Joining us now to do that is none other than managing partner and head of liquid investments at crypto native investment firm CoinFund, Seth Gins. Welcome back, Seth.
Hey, how's it going, Lawrence? Hey, Christine.
How are you?
Good, good.
Great. So, look, Solana, it goes down twice over the weekend. And the second time is because they couldn't figure out because they messed up the first time. And they still don't know what caused that first crash, and they had to fork and all this. So, what's your reaction here? It's granted they are resumed, everything's back to normal. It's, allegedly, but I mean, how do you read this?
I mean, look, it's not good that it continues to have these periodic issues that come up. At the same time, I think the market reaction, which, as you noted, was more or less non-existent, a brief sell-off that then saw recovery, shows that we understand that we're building something that's very difficult here. And in time, these types of outages, and this was around an upgrade, will hopefully be addressed, and hopefully that in time is sooner rather than later. I think there's very much a desire to see successful monolithic blockchains as part of the ecosystem, and we need to get these kinks. And I say kinks, but this is pretty serious. We need to get these worked out, and this is part of what we're doing.
Well, are you invested in Solana-based projects? I mean, is this a problem for them? And what are you hearing? And when you're a very well known investor in the space. So when you hear about or talking to projects wanting to invest or build on Solana, rather, do you have concerns?
So I think that we've had these liveliness issues over the past few years with Solana. This actually was less liveliness, more TPS degrading significantly. So the throughput degrading significantly. I'd say the issue that's been more of a concern for projects with Solana has been everything that happened around FTX, and the fact that there was a perceived close relationship between FTX and Solana. That relationship was actually becoming more distant over the course of 22. But I think it's very much on the community to show that they're able to be resilient, bounce back from that, and drive really strong organic developer activity as we come into this new year and put behind us the association with FTX.
But didn't that association, of course, give a lot of high expectations on Solana? Regardless, in other words, look, they might have parted ways.
I know Solana through SBF. I mean, he was their #1 ambassador.
Yeah, I mean, but nonetheless, now everybody's looking at them, and of course, the whole idea that this was an Ethereum killer. It was going to replace Ethereum, or it was going to take a lot of what that developer manpower away from Ethereum and onto this. And then now you have these kind of system outages. Doesn't that create some sort of concern that, hey, you know what? They had a bad association in the past. Currently, they seem to be in over their heads, or at least the developers don't, for the core here, don't seem to know what's going on 100%. Doesn't that kind of, sort of spells a bad cycle for Solana?
Well, again, I think I think we've already had a lot of the concerns come into Solana. That was what brought it down to $10 and then briefly $8. I think the phase that we're in right now with it is a question around whether we'll be able to see a resurgence in the community around Solana. I think this is a short-term setback, but I really don't think that it's affecting project decisions around building on Solana. I think that the much bigger question for them is where you went earlier, which is, okay, we know about. If you're a project that came in the last 18 months, you probably know about Solana in one way or another because of its association with SBF or FTX. Can we move away from that as a project? Is there a resurgence of activity? I think that's the core question. While these throughput issues and the transient outages are technical issues that need to be addressed, but are not going to be the binary yes no on developing on the chain. The expectation is that those will be solved by the time we're ready for prime time.
All right, so I'm interested in your investment thesis. Like you have decades of experience on Wall Street. You also started in the crypto sector relatively early with an angel investment in Coinbase back in 2012. You say that CoinFund has made a bottoming call since last summer. So where do you see the space going from here? What are you investing in?
Yeah, well, so the call that we made last summer was that we were in a bottoming process. And if you look at total market cap for crypto, it's actually, it was down and to the right into June, and it's actually flattened out, and we're starting to get a little bit of a recovery now. And that bottoming call was predicated on three things. One was that the macro was starting to shift from a headwind to neutral. We very much think that that's still the case. The second was that top-down crypto was improving, that all of the shoes had dropped. We were wrong on that. FTX was still to drop. But what's remarkable is within a week of FTX going bankrupt, you had Bitcoin relative to the NASDAQ starting to gain again. And now we have Bitcoin and ETH both back above where they were pre-FTX. So we've completely recovered the drop that happened around FTX. And then the third component, which is probably the most important, is the fact that we had shifted back into an environment where good news was good news. In bear markets, good news is bad news and bad news is bad news. And when you're shifting back into more of a bull market regime, good news is good news. And what that practically means is when you have technical catalysts, think the merge, or in the period leading up to the merge, the testnet successfully going through merges, you were seeing ETH respond positively. And while ETH traded off on the merge itself, what's really interesting is ETH did not go to a new low on FTX, while Bitcoin briefly went to a new low. And there were actually a bunch of other tokens that are associated with protocols that have strong fundamentals that outperformed ETH from the summer as well. So seeing fundamentals matter, fundamental catalysts reflected in price, that's a core element of a bottoming process, and it makes the space investable again.
Nonetheless, we do have regulatory headwinds, it seems, coming out of the SEC, as I mentioned earlier. It seems that we might have a situation where everything gets declared as security, or most things are being declared as securities. That could affect a lot of the exchanges. I know you're invested in Coinbase. I don't know if that's still a holding of yours. But that could require them to become securities dealers and their tokens to become securities. It might mean that anybody starting a new project might have to register with the SEC, things like that. Do you see that as affecting the long-term prospects, or at least adding a little bit of stumbling blocks along the way for these projects and for some of the bigger protocols? Because now all of a sudden they're securities, potentially.
Well, so longer term, we think that regulation, a thoughtful regulatory regime, is a positive for the space and materially increases the addressable market. But the thoughtful word choice there is really important. It's important that we have informed decision makers setting a regulatory regime that is not just workable for crypto, but one where the projects that are good actors are able to thrive. So the idea that we're moving toward a more regulated crypto is not something that should be scary as long as it's done with thoughtful regulation. Now, one thing that does worry me is regulation that isn't thoughtful has a few implications. One is, and plenty of people are talking about this, the risk that activity goes offshore. The U.S. was blessed with very strong positioning for Web 2.0, and I think it would be fantastic to see that remain the case for Web 3 and everything that comes after that. Well, we have a regulatory regime in Europe that's taking shape now. UK, Hong Kong now moving very quickly to open up to crypto to some extent in response to seeing a lot of developers move to Singapore. So we're seeing, and then Dubai and Abu Dhabi, very active, moving quickly to try to attract developers and really the core important tech innovation onshore to their jurisdiction. So I think it's important that we define what the rules of engagement are in the US in a clear way, so that we can remain very much at the forefront, because right now the US is at the forefront, and it's really important that we keep that. Now, the flip side of that as well, though, is if you move too quickly on regulation, assuming that we're not going to see regulation that shuts off crypto entirely, which I think is highly unlikely, you end up with the potential for regulatory capture. And that goes against the ethos of crypto, right? It's supposed to be permissionless, where people can disrupt really quickly the incumbents. So if we move into an environment that very quickly defines a strict regulatory regime, and the only people that can comply with it are the biggest players, you end up having a world of regulatory capture that looks a lot like GDPR in Europe. And that ossified the competitive landscape in Web 2 in Europe and allowed a lot of disruption to happen in the US.
All right. Well, Seth, we got to end there. We'll see how things develop. Thank you so much for joining us this morning. That was CoinFund Managing Partner and Head of Liquid Investments, Seth Gins.